अस्सलाम आज हम सेकंड पार्ट उसी का स्टार्ट करेंगे ट्रेड साइकिल का और वो है द केन्जियन थ्योरी ऑफ ट्रेड साइकिल. So Keynes has not offered a pure theory of trade cycle, but he explained those factors which bring changes in income, output, and employment. Yet it is an incomplete explanation of the trade cycle. According to Keynes, the cyclical fluctuations are caused by changes in the marginal efficiency of capital. So, according to Keynes, if the rate of return of capital is greater than the rate of interest, then businessman expands the business and increases the investment. On the other hand, if ratio of interest is higher than the rate of return, the business will be contracted. While the marginal efficiency of capital depend upon two factors. And what are these two factors? Number one is expected return from capital asset. The second one is replacement cost of the assets. So marginal efficiency of capital is raised by new investment and by expectation of rising prices. It is lowered by falling prices and fall in investment. So when the rate of capital return is higher than the rate of interest, it leads to investment. So the volume of the employment and income increases. The demand for consumer goods and capital goods increases. It is called expansion phase of the trade cycle. So when marginal efficiency of capital relatively fall, then the current rate of interest, it is the phase of contraction because further scope of investment decline. People save more money due to a higher rate of interest. So more saving reduce the demand of consumer goods. So the reason is, we can say, due to the excess of saving, the income and employment decline, we are in the phase of recession, which finally result depression. So Keynes has also introduced very important terms which brings change in the economic activity, and there are propensity to consumers, propensity to save, and the last one is marginal efficiency of capital. So he says that downswing of the trade is caused by the fall in the propensity to consume because when the income increases or decreases, consumption also change but not according to that ratio as the income changes. There is always less change than the change in income. Whenever savings begins to exceed then the investment, a depression is developed. So criticism on this theory is also there. This theory failed to explain the repetition of boom and depression at almost a regular interval. Multiplier concept of Keynes does not offer the satisfactory explanation of the business cycle, and Hicks says that cyclical fluctuations are caused by the interaction of multiplier